It's January 2026 and markets are doing what markets do, recalibrating. Indian equities logged their sharpest correction in over 3 months, with benchmark indices adjusting to shifts in foreign flows and global trade dynamics. Foreign investors repositioned significantly through 2025, and the rupee has tested new levels against the dollar. That's the market we're in, one where policy, geopolitics, and flows move as decisively as earnings, where beta is uncertain, but alpha is available for those who know where to look. Which leads to the only question that matters right now: where is alpha in 2026? This is why we have created this platform for the conversations that shape how India allocates capital, the conversations that happen before they become consensus. Over the next few hours, you will hear from some of the sharpest minds in Indian finance and markets, the veterans from the industry who have turned early convection into extraordinary wealth, CIOs managing billions who are navigating this exact moment with real capital at stake, and economists and strategists who advise the institutions that move markets. Before we begin, special thanks to our partners, Mirae Asset Mutual Fund, ICICI Prudential Mutual Fund, and associate partner Reliance Industries Limited for believing in this idea from day zero. Let's begin with what matters right now: markets ahead. Valuations have adjusted, flows have reversed, the macro environment has shifted. The old playbook doesn't work anymore, which means 2026 belongs to investors making conviction calls while others wait for clarity. So where are the risks? Where are the opportunities? To explore that, please welcome Prashant Nair, Executive Editor at CNBC-TV18. And joining him for this conversation, we have Raamdeo Agrawal, Chairman and Co-founder, Motilal Oswal Financial Services, and Manish Chokhani, Director at Enam Holdings. Please welcome them with a huge round of applause. Prashant, over to you.
Thanks very much, Shruti, for that. Please. I think we'll get to alpha in just a bit, but I think 2026 has started on a phenomenal note, right? I mean, it's hard to believe it's only, 10, 12 days into this year. 2025, I dare say, seemed like 3 years compressed into one. And these 12 days seemed like, the whole year in that sense. It's the sheer amount of news flow, the news cycle, and every day is new. What we're going to try and do is understand if, it matters for investing, right? At the end of the day, how do you use everything which is being thrown at us in a way which helps us rather than hurts us, right? I want to first put up something which Manish tweeted, and I think it'll come up right here on the screens, which I think perfectly, as they say, a picture is worth 1,000 words. There you go. So there's Tintin, there's Captain, there's Snowy. What a year, Captain, it's only the end of the first week. So, I think, Manish, let's start there. I think that tells the story, doesn't it?
Well, it's thanks to President Trump, right? You wake up every morning and he's made for television. And he's reset all rooms of the game. And we're back to, like in 1980s, we used to watch Hindi movies. It was Aaj Ka Gunda Raj. That seems to be going on.
But has the world changed, Manish? And will it stay changed?
Yeah, the world has fundamentally changed. There's no two ways about it. That what happened after falling of Berlin Wall gave us 25 years of American supremacy, rise of globalization, capital markets, and all of that. And President Trump is clearly reversing that there's no more globalization. We don't want just in time. We want resilient supply chains. We want nearshoring, friendshoring, onshoring. So this move of capital across the world, goods all over the world, is not going to continue forever. And it is now an inflationary world that we're living in. Because you've created these bottlenecks everywhere, and that gives rise to different kinds of asset classes. You've seen, therefore, the rise of gold and silver and stuff like that, because it's really an anti-dollar. What is the next currency that I could be in? It's not connected to equities, but if I have to store it, the older people buy gold and silver, and the youngsters all go and buy Bitcoin or whatever. So there is a change in the playing field. Having said all of that, as equity guys, we learn, we buy businesses, we buy them cheap. And as long as they compound and they make money for you, we'll still be okay. And before we came in, I'll just use a 2-minute example for that today Motilal Oswal's profit and Sanjay's profit at AU is 2,500 odd crores. And if I go back to 2001, Lata will corroborate this, the profit for SBI, which has 25% of India's banking sector, was of this magnitude, 2,500 crores. And today they are going to be north of 80,000 crores. So in a sense, that's the alpha you need to look for. It's not about what happens this year, this quarter. The scale of opportunity is just crazy. I remember buying Bajaj Finance in 2008. Sanjay, the profit was 20 crores, and there'll be a 20,000 crores this year. So it's a country of opportunity. So let's not get diverted by President Trump. He will play his games. The playing field has indeed changed. As long as we recognize the change to inflation assets, I think we should be okay.
As they say, we kind of tend to overestimate the impact of things closer and underestimate things which are far out in the future. But that does not apply here. In a way, you're saying, well, the way if things are fundamentally changed, it'll stay changed. Yes. It may not matter that much for how you invest. That's the point you're making, Manish?
But, I mean, think of it like Warren Buffett went through how many cycles, and Raamdeo ji will speak more about it. But his first wealth was really made in the inflationary era when he bought brands and stuff. And he morphed over time. Towards the end of his career, he was still buying value. He bought Apple very famously at a 15 PBT multiple. He was not betting on a high multiple in a technology stock. But he played the game well enough to come to that as the playing field changed. And he changed his style, but he never gave up his value orientation. Same way, like we always say, I say, if you can buy something that you look out 5 years from now and it looks like a 5 multiple, that means I know the business for 5 years. And at the end of 5 years, if I've bought a 5 multiple stock today, the end of 5 years, I'm expecting the multiple to be somewhere between 15 and 25, which means I'll make 3x to 5x, which is a 24 to 40% kind of CAGR for me, which is good enough. And that basics of investments will never change.
Raamdeo ji, do come in. Do everything which is happening, Trump and everything which President Trump is throwing at us, does it change at all? Does it? Do you worry about it in any which way in terms of how you're investing and how you forecast things?
No, I don't think. As far as my investing is concerned, Trump doesn't impact me. Okay. But of course, world will be impacted because the multilateral globalization which was on, I think world is very interdependent. Now, how exactly it will navigate, it will remain interdependent, and actually it will become even more interdependent. But how do you trade between two countries? I think Singapore Prime Minister said very well. He said, whatever Trump does, trade will find its own way. It's like a water. I found that to be the most important kind of thing. So these things keep happening. Of course, I don't think in the very long run, I mean, one side Trump is happening, the other side AI is happening. So I don't know how to figure out which is going to impact how much. So I would feel very happy that I'm in India. I do things which I understand, and we'll find few things in investing. You don't need to have a view. You don't have to view on everything. You need to have a view on 4-5 things. That's it. I think I'll be able to find enough ideas out there.
With all this uncertainty, just one to close that loop, Raamdeo ji, all the uncertainty, all the macros, everything, etc., which is happening, and if Manish's point is that it's not a short-term thing. I mean, something is fundamentally changed. Does it lead to low? I mean, there will be headwinds to growth, etc. For a risk asset like equities, does it lead to lower multiples? Generally speaking, or no? It should not.
No. See, equity is very exotic, mystical asset class. Okay, equity. I mean, even I am still discovering what is equity. See, equity has a huge power to take a lot of uncertainty in, and yet, entrepreneur, he's the magician. He can navigate all kinds of risk in his own way. So we have to find those entrepreneurs who are able to navigate those things. Whatever his challenge comes, he's able to navigate and deliver me earnings. So if AU is built or any other entities are built, it's not that they didn't have challenges. So new set of challenges will come. But the entrepreneur has that power or magical, competence and determination to sail through all those difficulties and give us the earnings.
Okay, let me ask you something which I don't think either of you want to answer, which is the India-US trade deal. Manish, let me start with you. will get done in 3 months? It'll take 6? It'll take more than 6? What's your sense?
He said you don't have to have a view on everything, so we don't have a view.
But take a shot at it.
No one knows. I mean, even the man who has to sign it, he might decide to change tomorrow morning.
Yeah.
So no one can answer that question.
But does that? I mean, how do you think about it? Eventually, it'll get repaired. Maybe it takes a little longer, a little less.
I mean, worst case is the term is 3 years more. So that's the outside limit, right?
3 years.
India and US will be...
3 years was not there in the options. There was only 3 months, 6 months.
No, I mean, two countries like this can't be at loggerheads for long.
Yeah.
But the fact is we don't have too many things we can, hold someone to ransom for, right, unlike China. And therefore, it's getting dragged on until, like I said in the beginning, you're kind of now in a world of a G2 where there are two big bullies and you have to decide, you have to go in one camp. We don't want to go into either camp. And both of them are trying to, push us and prod us to fall into a camp. The better that we just stay out of these games that they're playing. And if it takes long, it's painful for the next 3 months, 6 months, 1 year, and for the companies and the individuals involved. But on a 10, 20-year cycle, I think what we're doing is the right thing, to stand with our position and what we need to do. So I'm not so concerned about how long it takes.
Manish, you have a global investing view as well, because you invest in other markets. And this is also, I mean, it's not so much about the tariff rate, whether this is this or that. I mean, exposure to the US as a percentage of GDP is small. But it's also a time of absolutely radical innovation, right? Across sectors. And that is where does that worry you a little bit, where there are these two countries, US and China, who are kind of pulling away, and everyone else, for the lack of a better way to put it, is kind of sort of falling into the gulf. I hope India is not, and India kind of sort of,
No, it's fair. I've said this for a long time, that you asked him earlier about, do terminal values get affected? Of course they do. It's like, would you now be buying Indian IT services companies at high multiples? You won't, because there is a terminal value to that business. For example, what happened to broadcasting TV versus OTT? You know that there's a multiple which is going to collapse. Any disruption, you know the losers very well. For example, if EVs take over, you know what will happen to ICE engines and so on. So that disruption is certainly damaging for a number of businesses. We don't know the winners as yet. And by losing out in this AI business, forget the valuations, which may be bubble like today, but the business is real, like the internet was real. Now, my hope is that India is a beneficiary of the AI trade, because we use our data sets to find solutions which are unique to us. The way when the internet came, our types of businesses, financial services, for example, really benefited from it. We became a lot more global. We started having clients globally. Our research costs went down. So in the same vein, anyone with organized data sets, which is the next 2-3 year window of opportunity for our Indian companies to organize that. But what lies beyond that is how well we use this to get both efficiency as well as differentiation. So in that context, India is really falling behind in the technology space. But the way China took it as a wake-up call 10 years ago, when the first Trump presidency went hammer and tongs after them, and they realized that we need to stand up and create our own tech and our own markets and our own systems for doing things. I think that's a wake-up call we are going through today. The way it happened when we got hit with the first Pokhran explosions. And the next 2-3 years, actually, India woke up. I mean, the rise of what we did with ISRO and the defense industry really owes its origins to that period. I think this period will create a lot of important companies being born in India out of this need and this realization that we need to play our own game as well.
You think that is happening, that waking up is happening as we speak?
Yes, it is happening.
It is happening. Raamdeo, on this AI question, do you have any thoughts at all in terms of how it impacts? I mean, we heard it became almost a meme towards the end of last year. India is like the anti-AI. But I don't know if that still holds. But any thoughts at all? AI and how that impacts markets, what businesses will change. Manish spoke about IT having a terminal value now. What's your sense?
Yeah, so as far as IT is concerned, what he said is right, that terminal value seems to be, today opinion is that terminal value of Indian IT is gone down what it was considered 5 years back. So clearly that's the impact of AI directly on the sector. But I think like yoga is a technology, you can say. Okay, yoga we discovered, it's a completely Indian stuff. But the worldwide, I think US guys, they use it much more and they benefit more. So like that, AI is discovered in US or China, wherever it is being developed. But we are the fastest and the biggest adopter of AI. And our services company will deliver the highest number of AI agents and things like that. So I think how it's a big development after internet. So how exactly will evolve and how it will be used in a corporate situation. You see the way GCCs are coming up. It's a bigger phenomenon than even IT revolution. So all the AI agents of the world could be sitting out of India. So it's too early. Let's not call one way or other. Probably we could be benefiting a lot more than what we might be missing out not as a technology originator.
Fair enough. Let's drill it down to some local stuff, markets per se. Manish, you think 26 will be a tough year? I mean, no year is an easy year, but do you think it'll be tougher than usual, or what's your sense?
We spoke in Diwali, we spoke in December, so it's not changing because the calendar has changed.
Correct.
It is a tough year. Until earnings cross substantially double digits and come closer to mid-teens, people aren't going to come chase this market. Money has been going already to emerging markets from Korea all the way to Peru and Chile. The anti-US trade in a way has been on already. Metals have been doing well. Hard assets have been doing well. That trade continues. And I said even then that I would expect financials, hard assets, metals, and public sector, especially with the finance minister and the budget day now, a last big resource raising exercise is left is really from the PSUs. So these three would dominate this year in my sense. And if you make a double digit on the index, I'd be very, very happy. I would take it.
Double digit in the index would be a great outcome. And you're saying hard assets, which you've kind of been bullish on, financials and PSUs are three areas. Raamdeo ji, same sawal aapse. Easy year, tougher than usual year. And where would you generate alpha?
Yeah.
Which is why we're here.
Yeah. So I think it will be better year because earning cycle is turning for sure. Because I just saw the estimate we cover one of the largest number of companies here, 350 companies. So MO Universe, this quarter is expected to deliver 20% earnings growth. This is after 6 or 7 quarters. We are getting real upturn.
This third quarter,
earnings. Yeah.
20%.
Index itself could be about 8 to 10%, but all 350 companies put together will be about 20% aggregate. So let's see what comes out. And my sense is Q4 will be even better. So I'm very kind of optimistic on the earnings cycle turning up after brief, lull for last 4-5 quarters. And government is also after it. Now government is trying to put in place, slow down in the credit cycle, slow down in the, your credit cost. You are given fiscal benefit, you are given monetary benefit, you are given GST benefit. So government is firing all cylinders to get their normal GDP growth going at 10-11% so they can collect taxes. They're not able to collect tax. You see the tax collection, 2-3%, 4%. So they need to get to 12-14%. So now there is a vested interest of the government to reflect the economy to about 10-12% nominal. Hopefully with 4% inflation, it could be 7-8% kind of real GDP growth rate. That GDP growth is better than 7-8% now with nominal GDP growth of 8%, deflator being 0.5%. I think that doesn't fly in India. So I think we are again back to the old style, 7%, 7 plus 4 or something like that. So I'm optimistic that this will happen in next 12 months and which will push up the earning cycle big time. As far as the sectors, I think large caps are better chance to beat the market than the mid and small. Second, I think PSUs still have a lot of steam. They are much more reasonably valued than private sector and earnings growth is almost 2x of private sector. So that looks to be a very interesting category. And I think financials, I think auto will be the star of the year.
So just a couple of things, autos, two-wheelers, four-wheelers.
I don't know. I think you should buy auto ETF.
An auto ETF, everything in it. And PSUs, you said, PSU financials, PSU banks. You were referring to PSUs generally?
Yeah, I'm not suggesting any sectoral.
Okay. But
PSU as an aggregate vis-a-vis private sector, PSU should do better.
Okay. And within that, any segment?
I think you are led by, PSU is dominated by banks. Banks clearly. So banks in any case is coming back. So sure. PSU banks led by SBI and all, I think they should do well.
Okay. And capital markets, of course, has been a
that is evergreen for next 25 years, one way.
You leave something for the fund managers.
No, we'll get to that. And I think Sandeep is here and others are here. Raamdeo ji, you said government also has a vested interest now to push up growth to collect more taxes.
Yes.
या तो आप GDP बढ़ा सकते हैं या फिर आप tax rate बढ़ा सकते हैं.
मेरा वो टैक्स रेट तो काम नहीं करता है. See,
नहीं, मैं इसलिए budget is around the corner, so I wanted to just ask you.
Yeah.
Just a framework in terms of how you're thinking about the budget, because there is a revenue shortfall, and I think we'll discuss this with on the macro panel. But just your thoughts.
No, there is no question of raising the taxes, because otherwise they would have not brought down the GST from 28 to 18. It's a budget in itself. So I don't think the direction of government has opened the hands. So I don't think they are going back on to raising the taxes. That's not the way to, because what will you tax? If the economy is not growing, any kind of tax rate is no meaning. So first you've got to get the tailwind happening in the economy. And I think it's very simple. I think they had beaten down the credit flow for whatever reason. That must be their inflation control, whatever. Now they got to get it back to 14-15% credit growth. And that will give you 11-12% nominal, and then it's all evergreen.
But do you think we're on that road and we will start to see these?
It looks like. That's what I hear, what the governor is saying, what the SEBI chief is saying, what the broader things which are coming from Delhi. Look at we should not bother too much about what they say, because they can keep saying, but what they do. So what they do is what they've done in last
which is stimulate.
125 basis point cut in the interest rate. Credit flow gone up from 8-9% to 10.5%, 11-12%. Then you have the GST cut from 28 to 18. Your tax-free rate has gone from 6 lakhs to 12 lakhs. What more they can do? They can further cut the interest rate by another percent or so. I think things will happen.
तो कुछ खराब नहीं होगा बजट में, कुछ अच्छा हो सकता है, रामदेव जी.
I think so. I don't think government is going to go back till they get their taxation right. Okay. Their interest is to get the taxes from the market. Yeah.
Manish, budget?
No, he's rightly said it. They've already cut your direct taxes. They've already cut your indirect taxes. So there's nothing to look forward to on that side. And the resource raising exercise has to come now from public sector. And if some of those assets go cheap to private hands, like it started in 2002-03 in Vajpayee era, it reignites animal spirits, because private sector is clearly not opening the purse strings because they are a bit uncertain about what's happening in the world as well. So anything to revive animal spirits, whether through privatization or disinvestment or maybe some other PLI type scheme, would be very welcome, because even the labor codes which have come have actually, in a sense, increased the accounting cost for companies. So you need to give a profit fillip to the private sector. Let's see, something comes. The good news is they've demystified the budget. You don't wait with bated breath ki kis pe talwar padegi. Now you look for
your sector, which is commodities and hard assets, right? I mean, they've had a phenomenal year.
Yeah.
On that front, I mean, on the taxation front, I mean...
Listen, tax I don't honestly think about, because let's first think about making money. Then if we make money...
No, that's what we think. But I think...
No. Look, the beauty of our profession, which we've chosen, is you wake up optimistic every day, looking at the bright side of things. Yes. So I don't wake up worrying and chewing my nails. By and large, everyone in this country, I've said it very often, that if our God had put the GPS off by 5 degrees and we had landed either side of India, we wouldn't be discussing wealth creation. We would be discussing how do we stay alive. So be thankful for where we are. And by and large, the country is going in the right direction. We are in the right age, right space, right time. Things will be better.
That is a nice philosophical sort of close to the discussion, but I think points well made. I think we can maybe open the floor for a question or two if we have a question from the audience. Anyone, please, if you do, so please stand up, introduce yourself, and do ask the question. If you can get a mic to him, please. So behind you.
Thank you so much. So my name is Suresh Gandhi. I am from the healthcare industry, but after leaving healthcare industry, I have moved 15 steps into wealth management industry. And I am also a franchisee holder of Motilal Oswal. So Raamdeo ji, it's a pleasure meeting you, and likewise Manish ji. And I have been always a fan of CNBC-TV18, and I was sharing a lot of anecdotes about it, but I will share that later privately. While I like the optimistic approach that Manish ji has so very well highlighted, and a few of the things that one must keep in mind is that in the morning, when we wake up, we need to keep half a dozen different optimistic ideas afloat. Otherwise, we could go off very badly. But nevertheless, does it bother any of us, or you especially, the wealth creators in this country, that certain factors which come to my mind, and I have just jotted them down in 5 minutes that came to my mind. We talk of disruptions and what
So,
Trump is...
if I could just request you, if you could keep it brief, because we want to take a few more questions, please.
While Trump is doing what he would do, causing disruptions all over the world, and perhaps that is good for USA. But as a country, what are we doing? What disruptions are we doing? And does it not bother us that without some kind of disruptions, we would end up being nowhere in 5 years, 10 years? We might generate alpha, but for the next generation, we will have a very poor story to tell. There is hardly any research. There is hardly any innovation or beating in AI or being a leader in AI. There is hardly any cost advantage. The social unrest is humongous.
So can I ask them to respond? I think we got the gist of your question. Manish, you want to take it, please?
There are 10 other points.
Please.
Sureshji, I just know from 35 years, I could always make a macro bear case for India. And I know for 35 years, we just focused on buying the right entrepreneurs at the right price and generating wealth for ourselves. And by and large, has your living improved or not improved? Has all your standards of whatever you did, whether your house, your car, your road, well, I can't say the roads in Bombay, but generally
road anywhere you can't
coastal
say.
Road to aa gayi na, but
Coastal road,
so, but you can always see glass full or glass half empty. It depends. And you said you're from the wellness industry. If you choose to be looking at life with gratitude and happiness, you will stay well also. And if you look at things with a pessimistic outlook, you'll be pessimistic. I can share, my son is 32. He spends half his time now meeting technocrats and scientific talent. And we ourselves were fortunate to create a business based on that. The creative instinct of the youngsters in India is not dead. You and I may feel old. You go to IIT Madras, go to IIT Bombay, see what is happening there. We have an investment in Agnikul, like one of the top space rocket launching companies of India. He's created a rocket which goes and comes back the way Elon Musk has done, but at a fraction of the price, maybe for the SME sector. So to just dismiss that there's nothing happening in our country is to do with our lack of seeing or knowing what is there. There is stuff happening. Even if you looked at China 10 years ago, we used to famously say, we know software, we know IT, they don't know anything. From where did Tencent and Alibaba come out? From where did BYD come out? It came out from that same country, which we said is full of robotic people. So yahan bhi hoga, just have faith, have patience.
But there are no any green shoots that one can see.
It will come to you at 50p when the P comes and sells it to you in the IPO.
Thank you very much, sir.
Okay,
any more, please? Surubi, go on.
Fantastic conversation, gentlemen. So in the spirit of optimism, if I could ask, and Prashant was talking about taxation and Manish mentioned that the bulk of it is done, indirect and direct tax. But since we're being optimistic, let's talk about capital gains. And Manish also made that point, right? That jab gain hoga, uske baad tax ke bare mein dekhenge. But say if the government were to consider rolling back to 10% LTCG, will it really help the market? Will it really change anything? Or will it be a bullet wasted in an environment where there's anywhere too much flux?
You want to go? I don't want to hog the... You want to go?
No, see, as he said, the 15 or 10 depends on how much money you made. If you don't make money, then how does it matter? And actually, I don't think people really complain about 15%. Also, we also need...
Oh, so abhi 12 and a half hai.
No, see, it will definitely be a...
15 pe haan mat kehna.
I think it's 15. No?
12
ideas then.
So she was saying from 12 and a half, if it goes down to 10%.
I don't... See, it is sentiment booster for sure, but I don't think it's a game changer. No way.
At a time when you spoke about government revenues obviously being under pressure, Manish, just if you want to add?
No. Look, this capital gains is a red herring, and it creates a friction for everybody, including for the foreigners, because the way they have to do their fund accounting with accounting for NAV calculation with taxes implied when people come in and out is just wasting time. If they would just increase the STT on this, they would solve Jane Street and they would solve for FIIs, and you don't have taxation problems at all. But someday something will happen. But to answer your short point, the capital gains is a net deduction from your DCF, right? So your terminal value will go up to that extent marginally. But like he rightly said, I'd rather make 25% gain and pay a 12.5% tax than make a 12% gain and pay a 10% tax. So if we can get the animal spirits up for the entrepreneurs, let's focus on that. We guys are all derivatives. We ride behind people like Sanjay who actually build business, who build wealth. We are just buying 2%, 5% of their companies and riding with them. let's get their animal spirits up. I think if we get that from the budget, I think we would be very happy with that.
And that's so beautifully put, Manish. Thank you very much, both of you, gentlemen, for a really enriching conversation in our attempt at finding alpha in 2026. Really appreciate it. Thank you very much. Raamdeo ji, please stay on. No.
Thank you, gentlemen, for those insights.